So another old rule of money was, you have to buy your house because your house is your greatest investment. And that's where I got into a lot of hot water in 1997 when I wrote Rich Dad, Poor Dad. I said to people, your house is not an asset, your house is a liability, because most people think their houses are assets, and that's not true. So the old rule of money was to buy a house, and the new rule of money is you have to know the difference between an asset versus a liability. And these are very simple accounting terms, and again, I don't spell very well. So if I could explain very quickly why most people's houses are not assets. I'm not saying don't buy a house and don't have a dream house. I'm just saying know the difference in assets and liabilities. Because when you look at a financial statement, and this is my rough draft of one, this is the basis of financial intelligence, the basis of your financial IQ. This is why your banker asks you for your financial statement. Your banker does not ask you for your report card. The banker does not care if you had great grades or what school you went to. The banker wants to see your financial statement, income, and balance sheet, because this shows them how smart you are financially. This is more sophisticated than just, your credit score. But anyway, financial statements has income, expense, asset, and liability. So when most people buy a house, liability, when most people buy a house, what you have here is a mortgage. And it looks like you have a house here, which is an asset. But that's not really accurate. What determines if something's an asset or liability is the most important word in financial intelligence, and the word is cash flow. And we ask any accountant how important this is. So as a young boy, my rich dad very simply said, assets put money in your pocket. Cash flows into your pocket. And a liability takes money from your pocket. So if you're truthful about it, you say, well, does my house take money from my pocket? And I would say for most people, every month their house takes money from their pocket. And then the savers say, but my house is paid off. I don't have a mortgage on it. But you still have expense, insurance, and upkeep. So the house is taking money from your pocket. So my point here is this. If I have a house and money is flowing out of my pocket, that house is a liability. So my personal residence, my home, is a liability. Now, I love my house. I want you all to have your dream houses and all this. But I don't call my personal residence an asset. It's a liability. It's about $15,000 every single month. Whether I make money or not, the bank still wants to get paid, taxes still want to get paid, and all this. Now, if I have an apartment house or a single-family house, and every month my tenant pays me money, then that same house is an asset. So now, let's say the tenant walks out and stops paying me. That's when the house turns into a liability because I have no money coming in. So it's very simple. Rather than just say my house is an asset, you have to know today in the new rules of money what's an asset and what's a liability. Very simple rules are assets put money in your pocket and liabilities take money from your pocket. So when I ask most people, if you stop working today, how much money keeps going out? Where that money is still going out, it's a liability. And if you stop working today and money keeps coming in, that's an asset. Money is coming into your pocket. Assets put money in your pocket and liabilities take money from your pocket. The reason my wife and I could retire when we did at a relatively young age, we had more assets than liabilities. The reason people are in trouble today, they have more liabilities than assets. So if you're going to be rich today, don't just say my house is a good investment. You have to ask yourself, is my house an asset or a liability? My wife and I have two houses, one regular residential house, one vacation house, but we have several, I think we have about 1,000 to 1,500 apartment units that every month put money in our pocket. We also have stocks that put money in our pocket. We also have oil investments that put money in our pockets. So I work very hard at acquiring assets and minimizing liabilities. And that's the lesson on why the new information, the new rules are you must know assets versus liabilities.